You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to the 10 Bagger Podcast. This is episode number 5, and we are here at the Metals Investor Forum. It's November 2019, and I'm here with my friend, John Kaiser. John, thanks so much for joining me today. How are you?
Jordan, it's great to be here on your podcast with you.
Well, John, it's my pleasure, and we're going to talk about 10 baggers, and I want to have you on because in your newsletter, you focus, among many things, on bottom fishing and finding these companies. And as we were just talking about, they do turn around, and if and when we get a bull market, at least from my memory, that's the time when a lot of those companies, they can turn around and become 10 baggers. But you noted very importantly, there's the element of discovery, and that's what really makes a 10 bagger. Can you just expand upon that view?
Yeah, the Resource Junior has two ways where you can make 10 baggers. One is what happened in the last 15 years when metal prices went way up, and all of a sudden the cutoff grade for what counted as discovery, and also for existing deposits that were failures from past exploration cycles, they were suddenly in the money. And when you get a metal price move, like let's say if gold blew through $2,000 in real price terms, not some inflation adjusted, that would be monumental for the Resource Juniors. But until that happens, you don't have like a generalized secular bull market. Then you have to rely on the individual company making a discovery that works at the metal price that we have, say $1,450 to $1,500 gold. And that junior can generate its own little bull market by itself. Great Bear was an example of a 30 center going to size $8-9. And then there's the Me Too. Well, if they can do it, then the glass goes to half full. And other juniors attract capital, and some of them start looking like they're doing it, and that creates sort of a mini bull market within the resource sector. But we've now been in a sort of an 8-year extended secular bear market and pretty much a drought in terms of these fantastic discoveries that spawn these little area plays.
Okay, so you mentioned Great Bear. Well, first I have a question about pre-discovery and post-discovery, because there's some people who feel like Great Bear from $2, I know it's trading much higher than that now, but Great Bear from $2, like that, that could be the next 10 bagger. How do you feel about pre-discovery versus post-discovery? I mean, what I mean by post-discovery is a company, maybe they make a discovery, and the stock does well, but it's not a 10 bagger, but then the discovery just flourishes, it gets much bigger and even better, and then it becomes a 10 bagger from that point. I mean, do you think it's easier to find a 10 bagger that way, or is it easier to go to these pre-discovery plays? I mean, what's your opinion on pre and post-discovery plays?
My specialty is looking at good exploration stories, finding teams that are technically competent, that come up with a new wrinkle as to what are they doing differently from what others did in the past, if it's like a project that has seen past exploration, or they're out in some brand new area that's never been explored, or even what the new wave is doing, undercover exploration using new technologies that can see beneath the nothingness that's on surface. The market punishes these companies at an early stage by assigning very low valuations. But when they get an intersection that starts to validate the hypothesis, then you enter what I call S-curve territory. Now, I can take a company like Nevada Exploration Inc. and say, oh, the South Grass Valley project that they have, that's sort of south of the Cortez, Getchell, and Carlin trends that have over 300 million ounces outlined. They're down there. They've got a lower plate Carlin window type window. If they start intersecting something similar, the market will go, wow, what if this is like the North Carlin district? And if you just find a Cortez Hills equivalent, that's worth $2 billion. So eventually this little 20-cent stock could be not just a 10 bagger, but a 100 bagger go to $20. But in S-curve territory, the sky's the limit, because instead of it just being, a 5 million ounce high grade deposit, what if it's a 50, 80 million ounce system? And it's that type of discovery where, until proven otherwise by drill results, that the markets can dream all the way. That's where you get stocks going to incredible heights and fluctuating, and everybody gets into the game. And if it's mappable, like Northern Nevada, they find something in this location. And what about all those other locations outside of what's controlled by the Nevada Gold Mines JV? Then you have like a modern day gold rush. It's that S-curve, that transition from pre-discovery to discovery, and its uncertainty. That is why I'm addicted to the resource junior game.
What are some, you mentioned the companies in Nevada, and you mentioned Nevada exploration. Because I don't want you to give away more than that, but are there other areas of the world right now? Are there any other jurisdictions where companies are doing kind of similar exciting work, or they have new techniques and those sorts of things? Is that, from your purview, is that really only going on with Nevada exploration, or are there other jurisdictions that people could look to?
Well, one type of jurisdiction is the rethinking of an old district. And, Cisco Mining and its windfall is a classic example. I mean, this thing had its 1.5 million ounces or so of medium grade, but it never hung together. And so a bunch of geologists came there and said, what if this is a misunderstood Timmins district? What if we start using brute force drilling and start testing this? And lo and behold, they start showing, here are the controls. And they start turning an old district that's sort of never really made it into something substantial. The other is this undercover, you get younger rocks obscuring everything, you can't see through it. Nevada has it both in terms of sort of volcanics that have flooded it in the last 15 million years, upper plate rocks which are not as prospective for Carlin type deposits shoved over the lower plate rocks, and they've also got the downdrop basins where the valleys were formed and got filled with gravel, and all of this happened after the deposits were formed. So using tools like hydrogeochemistry to look through this, deeper penetrating geophysics, even sort of things like mobile ion techniques where you're looking for subtle clues of geochemistry migrating through garbage rocks and creating a focus. The most important thing about this is it's now the drill bit is part of your prospecting kit. It's no longer just here's the target, take a sniper shot at it and kill shot, boom, you've got a discovery. Now you actually need to use drilling to contextualize the geology, confirm that yes, there is a system underneath these cover rocks, and now we're vectoring in on it. So in Australia, they're doing that because they got it's a fantastic continent with all kinds of potential, but lots of it is obscured by younger garbage rocks, and that's the area where this is especially happening right now.
That's so fascinating, John, because it sounds to me like those are the things that you look for, the kind of the new techniques, developing new theories, looking at things in a new way, whereas a lot of other people, you get the same thing where they talk about management and people and share structure and, this jurisdiction, et cetera. But for you, it seems like, as far as you looking for these plays that can be 10 baggers, that's really your focus on new technologies, new ideas for bringing about these discoveries, applying those, not necessarily new areas, but applying those to the areas that we know about. I'm recapping what you're saying, but it just seems to me that, is there anything else that you would, aside from that you would look at to try and focus on finding 10 baggers?
I'm always on the lookout for something new, and the question I always ask every company is, what is it that you're doing that's different from what others have done? And it's that geological story, this narrative about what they have seen in the tea leaves, combined with, say, the latest theories about geology. Now everybody talks about the low sulfidation epithermal model and understanding where the boiling zone is and figuring out, are you way too high or are you too low? It's been eroded away. Bringing these new models to bear to rethink these old systems. And we're seeing this happen with these districts in Mexico where they've been chasing these veins, high-grade veins, never really drilling it and thinking about it in terms of epithermal models and that. These are the sorts of prospects that juniors are getting hold of. And when they can spin the story and make me understand what the geology story is and what the size of the prize potentially is. And by the way, this is a huge thing that's missing from this space. How do you quantify the size of the prize? The companies can't do any forward-looking stuff like that until they spent millions and years to deliver an economic study, a PEA. But we, as speculators, want to see what sort of deposit is there? What's the tonnage footprint? What if it's this grade and all that? And if it exists, what is it worth? The math on that exists, but the public doesn't do it. Even the industry doesn't do it, and that's something I'm working on, is making it easier for the gamblers in this space to see what the size of the prize is, map it to the valuation of the company as the market's pricing it right now, and make intelligent bets, and as results flow, be able to either increase it or decrease it. And that's what that S-curve activity is all about. It's like, is it getting way better than we ever imagined, or is it getting smaller? This revolution needs to happen. I think it's needed to bring the post-boomers, people born after 1965, into this space, become engaged in it, to feel they understand what's going on, and be sophisticated gamblers on outcomes, not just momentum trends, on actual fundamental outcomes, which take time to unfold, but also be able to gamble on the behavior of the crowd. Because in this junior game, it's like, is the sentiment going negative? Are the results going to be poor, or are they getting better? And all these rumors which dictate how the crowd behaves. Right now, anybody who plays this game, they're by themselves watching the chalk marks. Maybe they go to Stockhouse and look at some pumpers and bashers, but it's not a contextualized game where they can see who are the enemies, who are the bulls and bears, which way is it trending. And that's what the post-boomers are. They're mentally coded for. And we, as in this industry, I'm a boomer, we need to make the space accessible to an audience that really knows absolutely nothing about this resource junior game.
Okay, before we close, one more question, which is a little different, because we didn't talk about individual commodities. Is there a particular commodity that catches your eye, or one that you think over the next 12, 18 months that the price could go up and that could make it easier to get a 10-bagger? Because you noted that at the beginning that when that makes it easier to find a 10-bagger. So I'm curious if there's one or maybe two commodities that you're interested in because they might have a potential to rise quite a bit over the next year or 18 months.
In terms of sort of the base metals, the China super cycle, it's come and gone. It's now just growing, standard macroeconomic stuff. The mining industry has mobilized new supply. India, maybe another 5 years before it might hit that tipping point China hit in 2003. So these base metals in general are not going to go up 50, 100, 200% unless there's some horrible supply disruption. And with the whole outlook about the trade war and stuff and this global economy stalling, none of the base metals are really anything you should pin your hopes on that a metal price change. Gold is different. All this uncertainty about the future that's here. I mean, the 6 billion ounces that exist above ground, they're worth about $9 trillion. You've got $17 trillion of debt in Europe that's negative yielding. And you add up all these other asset classes, and gold is a drop in the bucket. But it's this portable, fungible asset class that hedges against this uncertainty. And I think we're not dealing with something like going from 2003 to 2011, from $250 to 1900, and then settling back, which was really a catch-up for inflation, because $400 gold in 1980 is $1250 gold today. So whoop-de-doo, we got a 15, 17% real gain. But it's going to be more like in the late 70s when there was extreme uncertainty about where's America going? Tehran, Afghanistan with the Soviet invasions, inflation, the OPEC and all this. And gold had only been freed from its price-fixing prison in 1972. So that was a huge catch-up, went to $850, settled around $350, $400. But that was a huge real gain. I think we're on the threshold of gold being repriced into the $2,000 to $3,000 range without inflation or anything being the sort of mathematical cause for that. And if that were to happen, simply because more people want to park some of their wealth in this asset class that the existing owners are suddenly very reluctant to sell, that would be huge for gold. Even going to 2,000, that's a 33% increase. Whoop-de-doo, who cares? But for juniors that are marginal, let's say 1,400, $2,000, the stock price can be 10 times what it is today. A stock like Midas Gold trying to develop the stibnite thing, 50, 60 cents. At $2,000 gold, that's a $4 to $6 stock based on all the current assumptions. So gold is the one metal where I think we could be bailed out in this junior resource sector.
Okay, I have to pick your brain because something popped in my head as you were answering that. What does that mean for silver? Like in this scenario, let's say you're right, gold makes that move. Obviously, we know silver is going to go higher, probably outperforms gold to some degree. Then is silver optionality a play, or will silver discoveries then potentially be, a great place to look for 10 baggers? Or are you just think it's kind of more safer and reasonable to focus on gold in that respect?
Well, gold's a $9 trillion asset class, and so it's much deeper, and it's all sitting there waiting to be resold to somebody. Most of the silver that exists above ground, it's fabricated into something. It's actually a metal that is useful. This float that is held by sort of speculators and investors, it is quite small. So if gold moves, you will see silver try to track it. And because you can't mobilize more silver, overnight, you're going to have to expand your existing mine, or you're going to have to develop a new mine. You're not going to see the silver market flooded. I don't see silver independently doing anything special except the macroeconomic growth increases the demand for all the non-investment uses for silver. But yes, it could certainly track gold, and it could, in percentage terms, it could deliver bigger gains. So the optics from speculators, when they map it to a junior that's got a silver dominant exploration play, that can create a boom within high grade silver type stories.
And I know you'll be you're definitely covering that area among many other areas. So John, as we close, please tell our listeners where they can go to follow your work and how they can subscribe.
It's kaiserresearch.com. It now costs $450 a year for a full access membership. That will change at the end of this year. So if you want to get on board ahead of what I think is a major bull cycle coming, do so between now and the end of the year.
Fantastic. And so, and last thing, you mentioned Nevada exploration earlier as even something that could be more than a potential 10 bagger. I mean, I just want to confirm that you stand by your statement on that's one to look for as far as being a potential 10 bagger.
Well, this one's interesting because if they demonstrate that there is a North Carlin equivalent district present in that South Grass Valley, the stock can go, more than 10. It's like 100 bagger. But the interesting part about the story is they have the keys to other potential locations in Nevada, and if they get validation of this concept in this location, then the market's going to say this company could go and stake these other areas and repeat this. So you get almost like a leveraged S-curve potential. So that's why it's one of the favorites. I'm a significant shareholder of it. I've backed it for ages. But they need to overcome this wall of skepticism that their method actually does represent the keys to unlocking the gold hidden under Nevada's gravel-covered basins.
Okay, on that note, John, thanks so much for joining me today. I mean, it was all the stuff that you cover. It's so fascinating. I think our listeners are going to get a lot out of this interview. So I thank you again, and look forward to talking to you again in the future.
Yeah, it's been a pleasure. I look forward to it.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.